Hello, everyone. Welcome to the market opening bell for Friday, August 8th, 2025, your 10-minute guide to the stock market. Markets are buzzing with anticipation of US interest rate cuts, pushing Hong Kong stocks upward with some fluctuations. The Hang Seng Index kicked off 71 points higher, dipped 90 points to a low of 24,820, then climbed 204 points to a high of 25,115 during midday trading, ultimately closing up 171 points or 0.7% at 25,081. The H-share index gained 49 points or 0.5% to 8,981, while the Hang Seng Tech Index edged up 14 points or 0.3% to 5,546. Total market turnover reached 245.7 billion Hong Kong dollars, with southbound funds pouring a net 661 million Hong Kong dollars into Hong Kong stocks. Notable net purchases included Xiaomi at 1.722 billion, SMIC at 499 million, Alibaba at 492 million, Tencent at 426 million, Hua Hong Semiconductor at 372 million, Akasol at 246 million, CSPC Pharmaceutical at 183 million, Laopu Gold at 166 million, and Innovent Biologics at 121 million. On the flip side, net sales hit Tracker Fund at 4.72 billion and PopMart at 283 million. Southbound funds have been on a buying spree, snapping up 10 cents for 11 straight days, totaling 6.37 billion. Alibaba for 4 days at 2.608 billion and SMIC for 4 days at 1.45 billion. From a technical perspective, the Hang Seng Index filled the downside gap between 25,000 and 25,082, but still faces a test to hold above 25,000, with the next resistance at 25,500. Over in the A-share market, the three major indexes opened slightly higher but moved in different directions. The Shanghai Composite Index rose 5 points or 0.2% to 3,639, while the Shenzhen Component Index slipped 19 points or 0.2% to 11,157. Combined turnover in Shanghai and Shenzhen hit 1.8297 trillion yuan, up 95.7 billion yuan from the prior day. The renminbi central parity rate was set at 7.1345 against the US dollar, up 64 pips from the previous trading day, marking its highest level in over 9 months since November 6, 2024. China's July trade data outperformed expectations, with exports growing 7.2% year-on-year in US dollar terms, accelerating for 2 consecutive months and hitting a 3-month high. Imports surprised by rising 4.1%, the strongest growth in a year, defying expectations of a decline. ASEAN remains China's top trading partner, though export growth to the region slowed slightly to 16.5% from June, while exports to the EU jumped 9.2%, showing Chinese exporters are aggressively targeting Europe amid tariff pressures. Exports to the US, however, saw a widened decline of 21%, signaling a pause in the earlier rush of front-loaded demand. In Hong Kong, brain computer interface stocks surged, with Nanjing Panda Electronics soaring nearly 20% and MicroPort Neuro climbing up to 8%. This was spurred by news that 7 Chinese ministries, including the Ministry of Industry and Information Technology, issued guidelines to foster innovation in the brain-computer interface industry, encouraging leading firms to form alliances and take on major national tech projects. Apple's exemption from the US 100% semiconductor tariff lifted mobile component stocks, with Cowell E-Holdings jumping 9.6%, Lens Technology gaining 2.9%, and Sunny Optical rising 3.3%. Meanwhile, China's 11th round of national drug procurement weighed on pharmaceutical stocks, with CSPC Pharmaceutical dropping 3.8%. On the earnings front, China Mobile reported first half operating revenue of 543.8 billion yuan, with communication service revenue up 0.7% to 467 billion yuan. Its digital transformation revenue grew 6.6% to 156.9 billion yuan, making up 33.6% of communication service revenue, up 1.9 percentage points. Emerging market revenue rose 9.3% to 29.1 billion yuan, and net profit climbed 5% to 84.235 billion yuan, beating expectations. Its midterm dividend increased 5.8% to 2.75 Hong Kong dollars. While real estate posted a widened first half loss of 2.406 billion Hong Kong dollars, up from 1.052 billion dollars last year, driven by a 5.118 billion dollars impairment on investment properties, resulting in a per share loss of 0.79 Hong Kong dollars. Still, its stock rose nearly 5% to 25.7 dollars, buoyed by slightly better than expected dividend and lower financing costs. Underlying net profit was $3.119 billion, down 0.13% year-on-year, with a first interim dividend of 66 cents, up 3.1%. Harbour City's revenue and operating profit changed by less than 1%, with a mall occupancy rate of 93%. Office occupancy held at 90%, but rents faced pressure from cost-conscious tenants and ample supply. Times Square saw revenue fall 15% and operating profit dropped 19%, though mall occupancy rose to 96% and office occupancy stayed at 90%. Net debt fell to 33.3 billion Hong Kong dollars, the lowest since listing, with average interest costs dropping from 5.7% in 2024 to 4.4%, saving 27% in borrowing costs. The debt to equity ratio remained at 17.6%. Swire Properties reported first half revenue of 8.72 billion Hong Kong dollars, up 20%, with underlying profit up 15% to 4.42 billion Hong Kong dollars, driven by gains from selling interests in Brickhill City Centre's mall, parking, and adjacent land. Recurring underlying profit attributable to shareholders fell 4% to $3.42 billion due to low Hong Kong office rental income and higher marketing costs for upcoming residential projects. It posted a net loss of $1.2 billion compared to a $1.8 billion profit last year, with a first interim dividend of 35 cents per share, up from 34 cents. Its stock rose 2.3% to $21.08. SMIC's second quarter net profit fell 19.5% year-on-year and 29.5% quarter-on-quarter to $132 million or 2 US cents per share due to soaring operating expenses. Revenue was $2.209 billion, up 17% year-on-year, but down 2% quarter-on-quarter, better than expected 4% to 6% decline. Gross margin was 20.4%, up 6.5 percentage points year-on-year, but down 2.1 points quarter-on-quarter, slightly above the 18 to 20% guidance. Wafer shipments rose 13% year-on-year and 4% quarter-on-quarter to 2.39 million units, with capacity utilization at 92.5%. Operating expenses jumped 68% year-on-year to $299 million and 52% quarter-on-quarter, with capital expenditure up 33% to $1.885 billion. SMIC expects third quarter revenue to grow 5 to 7% with a gross margin of 18 to 20%. Hua Hong Semiconductor reported second quarter sales of $566 million, up 18.3% year-on-year and 4.6% quarter-on-quarter, meeting its 550 to 570 million US dollar guidance. Gross margin was 10.9%, up 0.4 percentage points year-on-year and 1.7 points quarter-on-quarter, beating the 7 to 9% forecast. Profit attributable to owners rose 19.2% year-on-year and 112.1% quarter-on-quarter to $8 million US dollar. Capacity utilization hit a recent high, and third quarter guidance projects sales of 620 to 640 million US dollars with a gross margin of 10 to 12%. Its Wuxi 12-inch production line steadily ramping up, supporting upgrades in capacity and technology. Today's earnings releases include Conant Optical, FIH Mobile, Huixian REIT, Hutchison Telecommunications Hong Kong, China XLX Fertilizer, and Cansino Biologics. In the US, President Trump's announcement of a 100% tariff on imported chips, with exemptions for US-produced firms, led to a high open, low close session on Thursday. The Dow Jones Industrial Average, after rising 305 points, closed down 224 points or 0.5% at 43,968. The S&P 500 dipped 5 points or 0.1% to 6,340, while the Nasdaq, after climbing 238 points or 1.1%, closed up 73 points or 0.4% at 21,242. The Nasdaq Golden Dragon China Index rose 70 points or 0.95% to 7,521. Chip stocks advanced with Nvidia up 0.8%, AMD up 5.7%, TSMC up nearly 5%, and Micron up 2.8%. Apple gained 3.2% after a 5% rise on Wednesday, while Intel fell 3% after Trump called for its CEO's resignation. On earnings, Eli Lilly raised its full-year profit forecast, but saw shares drop 14% due to disappointing weight loss drug trial results. Airbnb's warning of unsustainable booking growth sent its shares down 8%. Pinterest reported second quarter sales up 17% to $998 million US dollars, beating estimates of $975 million US dollars, with net profit up 335% to $38.76 million, but adjusted earnings per share of 33 US cents missed the expected 35 cents, leading to a post-market drop of over 10%. Last week's U.S. initial jobless claims rose by 7,000 to 226,000, above the expected 221,000. Second quarter 2024 non-farm business sector unit labor costs rose 1.6%, slightly above the expected 1.5%, and down from the prior quarter's revised 6.9%, driven by a 4% rise in hourly compensation and a 2.4% increase in labor productivity. Sources indicate Fed Governor Christopher Waller is the top pick among Trump's advisory team to replace Fed Chair Jerome Powell, valued for his forward-looking policy approach and deep Fed knowledge. Other contenders include former Fed official Kevin Walsh and Trump's National Economic Council Director Kevin Hassett. Our stock pick today is MicroPort Neuro, stock code 2172. MicroPort Neuro is a pioneer and the largest Chinese company in China's neuro-interventional medical device industry, dedicated to providing innovative and accessible comprehensive solutions for cerebral vascular diseases to patients and doctors worldwide. It currently boasts a comprehensive product portfolio of commercialized products covering three major areas of cerebral vascular diseases: hemorrhagic stroke, cerebral atherosclerotic stenosis, and acute ischemic stroke. Based on 2024 sales revenue, the group holds the largest market share among domestic brands in China's neurointerventional medical device market. In terms of international business, as of the end of 2024, the group has successfully launched 8 products overseas, achieving commercialization in 30 countries or regions, including 9 of the top 10 countries globally for neurointerventional procedure volumes. Stroke and acute cerebral vascular disease is the second leading cause of death globally and the leading cause in China, characterized by high incidence, disability, mortality, and recurrence rates. Research data shows that China has the highest number of stroke patients globally, with a rising proportion of patients under 70 years old, indicating a trend of toward younger onset. The number of new stroke cases in China, approximately 3.4 million, far exceeds that in the US, approximately 610,000, and Europe, approximately 1.12 million, accounting for about one quarter of global annual new stroke cases. Benefiting from advancements in neuroimaging, neurointerventional therapy with its safety, efficacy, and minimally invasive nature is gradually replacing traditional open brain surgery and conventional drug treatments, becoming a key approach for stroke treatment. With global population aging and rising stroke incidence, the volume of neurointerventional procedures is expected to grow rapidly. The group currently has 25 products approved and commercialized in China, along with 11 products in various stages of development, of which 4 have been approved by the NMPA for green channel status, ranking first among Chinese neurointerventional medical device companies. Looking ahead, the group will continue to enhance its innovation capabilities to achieve comprehensive solutions for cerebrovascular diseases, advance its accessibility strategy to improve operational efficiency, and expand its global strategic layout. Recommended buy price 15 Hong Kong dollars, target price $16.35, stop loss price $14.2. I do not hold the aforementioned stock.